Today, ladies and gentlemen, we're talking about the coronavirus and how it may be affecting your stock portfolio. We're going to take a look at some analysts to see what exactly is going on, where we stand with this virus globally, and then we're going to take a look at my six-figure stock portfolio to see what is happening here. So, ladies and gentlemen, let's jump right into this.
Following the World Health Organization's decision to declare the 2019 novel coronavirus a public health emergency of international concern, I have today declared that the coronavirus presents a public health emergency in the United States. The actions we have taken and continue to take complement the work of China and the World Health Organization to contain the outbreak within China. In accordance with the declaration, beginning at 5 p.m. Eastern Standard Time, Sunday, February the 2nd, the United States government will implement temporary measures to increase our abilities to detect and contain the coronavirus proactively and aggressively. Any U.S. citizen returning to the United States who has been in Hubei province in the previous 14 days will be subject to up to 14 days of mandatory quarantine to ensure they are provided proper medical care and health screening. To be clear, this applies only to U.S. citizens who have been in Hubei province in the past 14 days prior to their attempted entry into the United States. Any U.S. citizen returning to the United States who has been in the rest of mainland China within the previous 14 days will undergo proactive entry health screening at a select number of ports of entry and up to 14 days of monitored self-quarantine to ensure they've not contracted the virus and do not pose a public health risk. Foreign nationals, other than immediate family of U.S. citizens and permanent residents who have traveled in China within the last 14 days will be denied entry into the United States for this time. Once again, these actions will become effective at 5 p.m. Eastern Standard Time, Sunday, February 2nd. These prudent, targeted, and temporary actions will decrease the pressure on public health officials screening incoming travelers, expedite the processing of U.S. citizens and permanent residents returning from China, and ensure resources are focused on the health and safety of the American people.
The health of the American public or my own personal health as well. But the fact that they are announcing that a 14-day quarantine for anybody who's been to Hubei province or self-quarantine for anybody who's been to China says the whole country of China needs to do that to get beyond this. And that's going to have enormous economic implications as you take the second largest economy and disconnect it from the global economy for a period of several weeks. I think the markets are sensing the economic damage that this could do more than the health damage that it poses.
Maybe they were on a shake your
It's literally the way it is. At the highs, it seems like you can do no wrong, and the consumer looks great. Earnings are on the upturn. Credit markets are perfect. Flows into stock funds. Volatility is low. Why wouldn't it be great? So when things start to turn, you start finding things that all of a sudden don't look as wonderful. And obviously, Midwest manufacturing, in other contexts, we could have written it off. Bernie Sanders high in the polls. In another week, maybe that's just noise. But it seems like one thing on top of another. And market sell-offs are like Murder on the Orient Express. Everybody did it in the end. Everyone was the murderer, even if only one did the killing.
Barbara, where do you want to be positioned in terms of the growth stocks versus the safe havens in this environment? Is this the opportunity to get back into the growth stocks?
I think so. I think ultimately it will be, because I think that's been the conundrum. You've had all these, the stocks have run and run and run, and where do you get in? If you missed Apple or you missed Amazon, when do you get in? And I think an opportunity will come up, because I think the defensives, they're pretty fully valued. Like Colgate today reported great numbers, but the stock is fairly valued. So, where do you go? I think it'll be an opportunity to rotate back in.
Ben, is this a buying opportunity in your eyes?
Well, first of all, hard to overstate the gravity of this situation for the individuals involved here. From the perspective of a multi-asset investor, we've been risk on since, I guess, for about 2 months now. And of course, a very painful week for that position, a very painful day today. But at the end of the day, I'm not sure that changes the underlying macro situation. Coronavirus at its core is a natural disaster. And we can debate the depth of it and the extent of it, but the shape of it, insofar as it's going to create a steep downdraft to growth for the affected regions immediately, and then you make that back over the course of the next few quarters or even throughout the year this year, that has not changed. And so I think we're holding the line on equities. I would not say it's a buying opportunity given the uncertainty. And to your earlier points, I think it's emphasizing the key aspects of a coherent multi-asset portfolio in this environment. One of them is that Treasuries is your best insurance policy against downside risk here. And the way that Treasuries have been trading have just ratcheted down. Every time you get a sell-off, Treasury yields fall, and they don't bounce when equities bounce. And so from the perspective of where do you want to take risk, we like going overweight equities versus underweight duration. And the other thing I'll just mention is that the U.S. market, so S&P, is a sensible overweight versus other equity markets in this environment. The high ROE, the decent earnings, the high quality market, that's exactly where you're going to see some protection during off days. And during this week, that's exactly what you saw.
Before I give you my opinion on what I think about this virus, it is going to be incredible to keep your attention on the current earnings coming up during this news cycle that we're having with this virus, considering we have Google, Chipotle, Disney, Twitter, and Uber, and probably a few other ones I think that are coming out. So keep an eye on that, but just deep diving right into my personal portfolio, I am absolutely flabbergasted by how much my portfolio hasn't actually dropped compared to the basic indices, and I think that's because of one contributing factor. Sure, I saw a hit on Apple. My overall portfolio dropped by about $1,000 from its all-time highs, and we can say the same with like Microsoft. A lot of the markets took a pretty decent hit, but it all came down to one specific company that we all know very well, which is fascinating to see because you think it would be hit most by the coronavirus, and that of course is Tesla. It actually finished the week off green, where most stocks finished in the red. And I think this is because of the hype train that Tesla is currently bringing. How long does this last? Well, I'm holding on for a little longer because I don't think it's giving up just yet. Even in this bad news cycle we're currently having, Tesla can handle it no problem, which means we're heading into what I would call a boom bust cycle with this stock. It's something we saw with Bitcoin. It's something we saw with the MJ sector. In the long run, could this thing absolutely be, a $500 billion market cap, maybe even $1 trillion market cap? Yes, for sure. But I don't plan on selling all of my position, of course. I just plan on maybe leveraging down a little bit in case this becomes what I just said, the boom bust cycle, which is what I think is going on here. Because all of a sudden, when in a stock like this that should be affected by shutting down its China plant until what? I think it's February 9th when they're allowed to reopen after just getting this thing started. I thought it would have rattled the stock more, but clearly it hasn't, which means everyone and their grandmother has been buying this stock up in the crazy rally that it has been experiencing. I'm not going to make this a Tesla video. I just think it's something fascinating to pay attention to in this, coronavirus phase we're going through. Now, where do I think this is headed? Honestly, in the short term, it's hard to say. This isn't like a SARS outbreak or an Ebola outbreak, which were very, very serious. Not saying that this can't become serious because these countries are taking very extreme precautions to protect themselves, but I can't have a for certain opinion on what happens here, which is why I wouldn't mind pulling a little bit of the profits out of Tesla and maybe redistributing them amongst my other accounts, or re-leveraging my accounts and buying some more sturdy stocks. But like she said, the problem is finding good security with those kind of foundational, recessionary proof stocks like your Procter & Gamble's, because they're just slightly overpriced. But there's deals out there. Like you guys know, I've been buying Wells Fargo is one that has been new on my list, and I might continue to cost average into this one amongst a few of my accounts here. But I'm just sitting here patient. I'm going to ride this real slow, not make any drastic decisions. I'm a long-term investor, and this is something that I got pointed out as a black swan event. I don't think it is right now. I don't think it's as serious as the media likes to make it out to be, but you just sit down, take it as it comes, and, just be healthy, be safe, and make the right investments, because it's a time like these, dividend investors like us get rich. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.